Breaking news here on Martyn Lucas Investor. Huge news today. We were up $3,000 yesterday. We're up another 1.1% yesterday. We've got some great news for the economy. You don't want to miss this video. This is the one video you do not want to miss, because in this video, I'm going to tell you where the price, where the rate hikes are going, how soon we're going to see a pivot by the Fed. We've got some news about the unemployment figures today, non-farm payrolls. You can obviously guess what's happened, because my portfolio is exploding again today. Consistently beating the market, consistently beating Warren Buffett. We aim to be the most honest channel on YouTube TV. And let me explain why I'm excited, why I'm celebrating, why I'm all in. Oh my gosh, it's going straight up. So we've got the news of non-farm payrolls and news of the Fed rate. We've got and the expectations of where we're going. So let me first of all, please invite you to subscribe to my channel and ring the bell. Ring the bell, turn notifications on so you don't miss anything. We go live up to 10 hours a day, soon to go live 24 hours a day on my show. Smash the like button as well and share this good news out to the world. You really want to get this information out. Let's have a look. Let's go into the numbers. The two things we're looking at this morning, as you can see, is non-farm payrolls. I'm going to zoom in a few moments and get some more detail here for you, but non-farm payrolls has virtually halved. That means less jobs were created. People are going to be paid less, which means it drives the prices down, which means a good sign for the Fed to finally start to bring rates down. Unemployment rate also has gone up. More people unemployed, so they can drop. There's more people looking for work, which means they don't have to pay so much money for employees, because there's more work available. The market's more competitive. It's cooling down, and it's a sign that the markets are that the economy is cooling down. Remember, the economy is not the stock market. It's a very, very different thing. Let me go into some detail and explain what I mean by that. So the unemployment rate in the United States increased to 3.9 in October 2023, slightly exceeding market expectations and the previous month's figure of 3.8. Now, we want to be clear. We're not trying to make people unemployed. The Fed doesn't want to make everybody employed. He wants a high employment rate with low inflation. However, to cool the market, you raise rates, you put pressure on prices, you drive prices down. That way, the economy slows down. People sell less. Then you have to lay people off. You can't employ as many people because you're not growing as fast, which means you don't have to pay as much for wages, which spirals down right the way through the price structure, and then we start to see that rates can come down. This is great news for the markets. It's why I'm up today, 1.4%. Phenomenal. I was up 9% yesterday. This marks the highest jobless rate since January 22, with the number of unemployed individuals rising by 146,000 to 6.5 million, while the count of employed individuals decreased by 348,000 to 161.2 million. Now, let's look at the people who got jobs, what they're being paid. The US economy added 150,000 jobs in October, about half of a downwardly revised 297 in September. You can see the economy is cooling, and below market forecast of 180. That is why we were expecting it to drop, but it's dropped by more. So this could mean a pivot in the spring. Not straight away, a couple more months, but of course, November is a great month for the markets. Everyone's going to rally, Santa rally, sell off end of December, and then we start a new year with a pivot. It's fantastic news. The report showed the labor market is slowly cooling, and several strikes including from members of the UAA weighed job gains occurred in healthcare, government, social assistance, employment in manufacturing decline due to strike activity. Payrolls in October were also below the average monthly gain of 258,000 over the prior 12 months, but remain well above the 70 to 100,000 needed per month to keep up with growth in the working age population. Okay, let's get straight back into my position, and you can see what is happening with the markets. This is extremely bullish, like extremely bullish for the markets. We've got November, which is traditionally one of the best months of the year, the Santa rally, then of course the sell-off, but altogether this has presented us as investors with a huge opportunity. I'm not saying you should buy now. In fact, I'm saying the very opposite. You shouldn't buy now. You should have already been in, gone all in like I have done, waiting for this moment. We saw this coming. We timed the first bull run perfectly. I named it to the day that the bull market started. It took 6 months, 2 quarters before the Bank of America declared the bull run. We had a run, we had a sell-off, and now we're going to start again. Now, there's going to be some selling pressure now. People are going to dump their stocks because why? People have bought the last couple of days. They've lost a lot of money early part of the year. Before we had the rally, they're going to sell off, and then we're going to build again. We're going to build all the way through November. We're going to have a nice little Santa rally and then trim off for tax harvesting. And then next year, maybe February, March, maybe the Fed will hold rates for a while. We want to see this occur again next month, a little, and maybe 1 or 2 more reports. But then we're going to see the rates come down. And of course, the economy is 6 months behind. 6 months behind the effects of the markets. Why we're seeing now Apple go down because of their deflationary position. They're reducing some of their positions there, the prices of their hardware, because they are seeing now, even though the markets are reacting upwardly, the economy's behind. Remember, we're starting to see that pricing pressure. They're having to reduce prices. So we're seeing the people on the street struggling now to buy stuff. It's now starting to be felt. It takes a while for the Fed's policy to kick in. We've not seen it kick in enough. Now we're starting to see it kick in. Now we're starting to see pressure, Apple reducing prices, not so many jobs, and so on. And now we're seeing the market start to boom because we know what comes next. That's why. Now, you don't want to be buying 6 months from now. You want to already be in. Ideally, you want to be in either a few weeks ago, where I was in, or you want to wait perhaps now for the Santa rally to cool as tax harvesting and find some discounts going into the new year. I don't need to do that because I'm already in. What I'll be doing now is perhaps trimming a little bit, not much. A lot of my stocks are dividend stocks. I want to hold those. Anyway, there we go. If you want to know the trades I'm making before I make them, and the buys and the sales before I make them, I announce everything I do to the world. Click above my head for my X account. Also up here is our newsletter. We have giveaways, prizes, breaking news, important information that I need to share with you. It's a free newsletter, and you even get a birthday message on your birthday as well. Click above my head for that. And then just over here, you'll see some more videos just up down here that you might want to check out that I think are related to this report. Until next time, as always, take care of your money, yourselves, your crypto, and each other.